Do you think seasonality have an edge?
Yes, not specifically, creating strategies based on days movement. However, we can have our own rules that can, add as a filter. Probably, trade these strategies on these days, or increase your
Sure,
exposure on these days, or avoid
sure,
these strategies on these days. So those kind of things works. I do follow that.
sure. Awesome. So let me just put out, let's hear it from a legendary trader. And any guesses? Who is this guy?
No man.
Are you kidding me? Come on,
Larry
Kiru.
Williams,
Okay.
huh?
Yes,
Okay,
it's Larry
okay.
Williams, right? So he's
I
like
have
one of the
listened to
legends.
his voice, but I haven't seen him.
Okay. So he's the legendary trader when it comes to trading. Okay. Why I call him a legendary trader? Because in US there is this championship that happens where you put your own $10,000, and at the end of the year they actually see who has made the highest money and he'll be the winner. Different parameters, not only money, risk to return and all that. He has not done it once, turning 10,000 into $1 million. He did it twice, I think so. And he also taught his daughter as well. And she's
Yeah.
also one of the winner of that. So let's hear from what Larry William has to say. Okay. So
Okay.
I'm just putting out a video link, and we have put out the link. If it is not coming properly on the video, people can copy paste the link.
I'm not able to hear anything, man.
Okay.
Probably the desktop voice is not there.
Okay. Okay. So let's put it this way. So
So
I have the link
share what he
in.
says. We can put this description there. People can view that.
Sure. So he says that Walmart prices just before Thanksgiving Day goes up.
Oh,
It's logical, right?
correct.
And he actually makes a lot of money based on trading this kind of seasonality pattern.
Okay.
He has figured out that how, not he has not mentioned in this, but in his book I've read a lot that he actually, if there is a down tick or a down week on bond market, okay, he will go and buy say equity market. So there are a lot of different combinations that he keeps on doing based on the seasonality and inter asset class. Although India is little far from it because they are very developed market, and in US and everywhere the markets are very interrelated because the fund flow is like, from the equity to the mutual equity to the fixed income is quite dynamic. But in India we have like 7%, and now we are talking about like 80-90% in equity markets, so that dynamic flow is not there. But there is a seasonality. So let's talk about one of the things that I've kind of put it out. So do seasonality work? So when I used to work for a company called Refinitiv, they had a very interesting app. Not the Refinitiv, there is another third party company called a SeasonX. And what they do is build these seasonality charts, and that's one of the most powerful charting platform that I ever seen. Okay, when it comes to seasonality charting, what do I mean by this seasonality? They've kind of rebased all the performance to 100, and they figured out that what is that seasonality pattern. So if you think about Southwest Airline, okay, from 3rd of September to 7th of December, in last 10 years or 11 years, okay, it has always gone up. Almost 11 years, Southwest Airline, almost every year, it has gone up, and gone up to the tune of 22%. So it's a no-brainer for someone to just look at it and say, you know what, seasonality Southwest Airline, because just to give you an example, the holiday season starts for
Right.
this, Southwest, and Southwest is the low cost airline like our Indigos and everything. So
Right.
people start onboarding them. So people, kind of see the benefits of it, and there is a seasonality into it. Okay. Similarly, I'm sure a lot of people heard about something called a Santa Claus rally. Now, what do you mean by Santa Claus rally? I'll read it out very categorically so people can relate to it. Santa Claus rally described as a sustained increase in the stock market that occurs in the last week of December, through first 2 trading days in the January.
Okay.
There are numerous explanations for the Santa Claus rally, including tax consideration, general feeling of optimism because we are all on holiday mood, happiness on Wall Street, and investing in holiday bonuses. Basically, the people are going to invest in their this thing, right? When they got bonuses.
Right.
Another theory is very large institutional player and number of whom are more sophisticated and pessimistic tend to go on vacation at this time, leaving the market to retail who are very happy always.
So when
because
there
as
is
a
an
retail, we are
absence,
always bullish.
correct. So when there is an absence of pessimism, obviously the markets can goes up.
Market rallies. And there is also a concept of something called as tax holidaying or whatever they call. Like people do get their bonuses. The FIIs get their bonuses based on their December performance.
Right.
Usually they keep a certain kitty in their bucket.
Correct.
To push their set of stocks in December. So when the mark to market happens, their portfolio is valued at a higher prices and they get hefty bonuses.
Right.
So that's how things work, right, Kiru?
Correct.
So I have just put out the data for 25 years for Dow Jones and trying to check whether that Santa Claus rally does make sense or not. And as you can see, somewhere around from 14 December to 1st of Jan. Okay. Out of 25 years, this is 19 years we made money. Only 6 years we lose money. Okay. And if you see over here, that we had almost 2.4% jump only between 15 days.
Mid of December to January, right?
January. And that's what Santa Claus rally is all about. Okay. Does it work in the shorter time frame? So what I did was, okay, not 25 years. Let's see whether it has an impact. Like in the recent, because the more people know about the seasonality, people will tend to trade those seasonality and make money out of it, right? That's what we keep on telling.
Right.
But the seasonality has not gone off. In fact, it has even bettered in the recent past. So like out of 10 years, in the last 10 years, between 14 December to 1st of Jan, okay, 8 years where you would have bought on 14th of December and sold on 1st of January, you would have made profit out of 10 times. Now, a lot of people will say this is a data bias, data anchoring, whatever the name they want to put it up. But there are white papers written on this. There is a value investing, there is momentum investing, and there is something called a seasonality investing. And you would not be, you can kind of take my word for it. And I've shown those papers. I'll try to figure that out. Where are they now? But seasonality trading far outperforms the momentum and the value investing.
Oh, okay.
Okay. I'll give you an example of there is a company called Kaveri Seeds.
Right.
Okay. They have a period where in August to September or October, I think so. I don't remember exact time period. I would have pulled it out otherwise. They always go up. Almost like in 15 years or 10 years, it has always gone up because that's the month, the shrimps that they export.
Okay.
They kind of harvest them and then get it. So it's seasonality, right?
Right.
So if there are traders who want to look at this part of the world also, there is another way of looking at where to invest in, right? Similarly, does seasonality work in Indian markets? I've just taken Bank Nifty. You can do it for Nifty also.
Okay, I have to
But
check.
this is, I think, yeah.
I know when you talk about seasonality, like Kaveri Seeds, probably we should check this Volta's price also. Man, does stocks like Volta's goes up during the summer season because people buy this?
No, that is not this. Usually, that's the quarterly earning is going to come in. You will see a spike in coming up after the summer quarter. Similarly, if you go back to the implied volatility of Infosys. Okay, I have a friend who had actually done a seasonality study on implied volatility of Infosys. You buy 1 month prior to the Infosys result, options, and implied volatility of the options always goes up just before the announcement of the Infosys. This is no brainer, right?
That is right.
Because we all know, but it's just that we are so skeptical that everybody knows, nobody will, everybody will trade. The funny part is because everybody thinks that everybody will trade, nobody trades. Let me repeat. I think it's a very interesting one. Okay.
Very true.
So nobody trades because they think that everybody knows, but everybody, I forgot. But you got the gist, right? The
Right,
funny
right,
part
right.
is people believe that everybody knows. That's why everybody will trading, but nobody trades it, right? Same thing in the bank Nifty seasonality. Okay, you can put it on Nifty also. And I think so you did also similar kind of study.
Right,
What
right,
are the best times to do your SIPs?
right.
And if you see, what I've done is take rolling 5-day return. Okay. So assuming I'm 25th, so I go 5 days back. So that's 25th or 26th. So I buy bank Nifty on 26th and sell on 31st.
Okay.
Okay. That almost generated 1.2% return.
Oh,
And this data I've taken from 2011.
nice. Okay.
Okay. If you buy at 27th and sell on the 1st, okay, you almost generate the same amount. And this is from 2011. I'm talking about data.
Okay. Okay.
Okay. So what it shows is there is definitely a seasonality of beginning of the month and end of the month. And why? For a specific reasons. Your opening and the closing are the most important aspect for any month. A strong month will mostly yield into a strong opening of the month will yield to a strong closing month, or a strong closing month may also have an impact on the strong opening of the month.
Right.
And then during the month, they may fall down.
Right.
It's like a lot of traders do BTST, right?
Right.
Buy at 350 in the first, huh?
And moreover, the initial, the first week would be lot of inflows that would be coming from MF because of SIP. So the
That is
markets
correct.
continues to go up on these first week of every month. Right, right.
Right. So that's how your seasonality impacts the market.
Right.
Okay. So this is the 2 period that we have kind of observed that, okay, if you want to build some strategies based on end of the month, and I'll show you one of them, okay, how you can actually use them and then take it up from there. Another interesting fact that we did, BNF monthly average high-low movement. So what we did was, okay, January, February, March, April, May, every month, high minus low.
The range.
Okay, the range in terms of percentage. And I can see very interesting facts. March was a major winner. And do you know why?
Because of the fiscal year end.
Possible. We can go about saying all the stories, but there is something behind it that we want to put out a theory behind it or not. But the data shows that March volatility is the highest. Okay. Although we have budgets coming on February and everything, but the March seems to be going through a biggest, or maybe the impacts of the taxation or whatever that may be, it is coming in March.
And
so
this
March
data period is for last 10 years.
2011 onwards, yes.
And if we remove the last year 2020, will the March will be same, because last year the corona crash happened in March, right? So because
So
of
that's
that, the volatility could
interesting.
have increased.
That is also very important. So I have not got into that detail, but I'm just trying to see in an overall process. And maybe, yeah, you are right. Maybe I should have taken out 2020 and figure out maybe, but my best guess would be, it would be still be outperforming all the other months. Like if you, even if I take 5% out from it, it will still be a month to look out for. Okay. And what are the interesting months are December, where we know that market hardly moves in December because the FIs are going on holiday. And the big mid of the year, June and July. And maybe if you want to build some strategies like straddles and strangles, and you rightly mentioned that, I wanted to increase my position sizes on certain month of the year where I know there is an edge, or, the water current behind me. So the June, July and December are the month where the high-low range are pretty squeezed. Okay. This is another interesting observation we did, Kiru. is intraday return versus overnight return, and that shocked us.
Okay.
Okay. So this is an average return on
This is an
all
average.
the
When you say intraday return, it is between open to close,
open to
and
close
overnight
between
return is
9:15 to
previous day's
3:30.
close to next day's close.
No, so that is overnight return. So intraday return, I'm talking about today's open to today's close.
And overnight return is yesterday's close to today's close.
Today's close. That is correct.
Okay, okay.
And what surprised us was Monday was a day where intraday also market goes down, and from Friday close to Monday close also has an downward momentum. Although the edge is pretty small, but there is still an edge, right? And
Right,
that's why it is called edge. It is not called something else. Edge has to be small, right?
right.
So this tells you that Monday market have an inherent nature of going down intraday, and it also has an inherent nature from Friday close to open. Maybe it is opening higher because of some overnight gap up news or anything, but tend to close down
Right.
from the Friday closing. What really was interesting is Wednesdays and Fridays. Don't know what is what's the seasonality for the Wednesday, but Thursday, yeah, intraday returns usually option selling doesn't work. Right, most of the option selling that we are talking about
Yeah.
doesn't work, but then seems to there is an edge in being on the long side on the Friday. And what is more interesting is because the Friday is the closing of a weekly bar, and you really want to have a positive closing to go into the positive Monday opening,
Okay.
you will have a very big edge. Like 0.20 is massive.
Right.
Okay, so you buy something on Thursday afternoon and sell on Friday afternoon, seems to give you a very positive edge. And you can actually play with the trend also.
Correct.
If Thursday was a positive day, and if we haven't done, we would want our viewers to kind of get that into details of it. We are just giving a platform and ideas, right? So from Thursday closing to Friday closing, it has an edge of 0.2%, which is phenomenal. So if you
Right.
want to build a strategy Thursday to Friday, buy today, sell tomorrow, that would be one of the things that we would want to look at it, because there is an inherent edge in it.
Right.
So
And
this
moreover,
is how
because of weekends, most probably, few users do not want to hold their positions. So, probably they would have closed it. And as you said, the main thing that I have really observed with respect to Friday is any kind of option selling is giving a tough time for option sellers on Fridays. So be it straddle, whatever kind of strategies that you deploy, sometimes Thursdays acts like Fridays acts like Thursdays. Like last Friday it was almost like Thursdays only. There was a complete decay in expiry. So probably
True.
if we have to check between Monday to Thursday, find out what happens to India VIX. And if it has already shot up too much, probably there is a higher chance that instead of decaying on Thursday, probably it can decay on Friday also.
That's very interesting. Can you just repeat it one more time? I just
So
missed out
what
that part.
happens is most of the time people believe that only on expiry day, because of theta
That's
decay,
it.
people are making money, and Friday the theta decay is much relatively lower. So Friday option selling doesn't work. That is the most of the people's perspective. But what happens is between Monday to Thursday, find out if the VIX is really shot up, because this week VIX has really shot up too much. Like from 14 or 15 it moved to 18 levels, but on expiry day it did not decay much. It was decayed and it was much flat, and there was no decay with option selling, as well as there was no retracement from VIX. But on Friday at the start of new expiry, there was a massive retracement from VIX, which ended up in large theta decay on Friday. So there was no fluctuations at all. Even the market was stagnant. But since VIX shot up between Monday to Thursday, it has cooled off on Friday.
On Friday. Interesting.
Probably we can check that. Okay, instead of completely avoiding in Friday, have a filter. Like if VIX shot up too much, probably there is higher probability that it can cool off on Friday also.
That is very interesting one. Yeah, would love to check that. So the Mondays and Fridays have a complete negative kind of a view.
Right.
Monday loses on intraday also and on an overnight, whereas Friday makes money on intraday as well as overnight. So that's how seasonality or data is showing us, right? So we did simple, very interesting strategy. I think so. You have done similar kind of exercise on your blog as well. like when to buy ETFs, those kind of stuff, right? So what we do is buy Bank Nifty when it is 2 month red. So just go and buy the third month. Okay.
Okay.
So I've just put the numbers for you. Like this is the kind of return. The only one that got butchered was your 2020,
Right.
35%. But if you had have gone through, we had a 2 red month. You buy, you had a nice bit of rally.
So you will be buying at the third month opening or third month
Opening,
closing?
yeah.
Opening.
Third month opening, yeah. So 2 red month. So third month opening, another red. 2 red month, or in fact 2 red month, I would have bought it here. I think so. We missed out on that part of it. Okay, it was a less. So it is still 2 months. So I would have bought here. So can you see 2 dots here? So basically I would have bought here and I would have lost some money, but I continued to buy it, and then it recovered that previous loss.
And what would be
this
the exit? Just hold it for 1 month and exited.
Yeah, so this is not a strategy.
Okay.
Obviously you would want to put up some filters on it, like, you know, you want to have, say, moving average filter if it crosses below 200-day moving average. But what we are trying to say is there is a kind of a pattern. If you see 2 down and the green one, nice rally. 2 red, buy at the opening, goes up. So the point I'm trying to say is, like, you know, there is seasonality. If somebody says that it does not have, it does not mean that it is not there, right?
Yeah,
You
and
have
moreover,
to-
no, it doesn't. We don't really need to come up with a reason for every strategy. Like
Yes.
Jim Simons know much. If you check all of his interviews, in one of his interviews said, like, their team, they do all this data crunching, tons of
Kiru,
data.
there is okay.
So this their Jim Simons team. So when they come up and don't try to deploy a strategy, they don't look for a reason. They check, okay, let me check with a vast number of data, and if this same pattern is repeating for a prolonged period of time for multiple years, then obviously it is having an edge. We don't really need to go and find out the reason behind why it is working. If the data says so, and if it is, supported by a large amount of data sets, they simply go with it. Only we try to come up with the reason for every single strategies. We really don't need to come up with reasons. If the data suggests and if the overall results is good, we can directly go for it.
And your job as a trader is to manage the risk,
Right?
As we have discussed many times, that when the RBI governor is coming and you should not be trading that strategy. That's one of the kind of things I always hear, and I said, no, we have not taken out the data, and at max what will happen is our stop loss is going to get hit.
Right.
That's we already kind of accounted for in your backtest as well. So yeah, that's pretty much from my end on the seasonality. So for me, seasonality do work. I'm trying to work on certain patterns now, just to have a special what do you call them, special event fund.
Okay.
When I say special event fund, it's just allocate a certain money where the probabilities are highest of making some money, and put that money in my liquid fund, or maybe have something on the long-term investment of the stocks, and only utilize when there is a high probability in the market to you play that out and generate some alpha on top of that.
With respect to certain things which we can use it as a filter. For an example, say suppose someone is, most of the people who have been trading previously with futures have been moved to options, right? And say suppose if you're trading based on intraday trend following or breakout systems, and you're trading between Monday to Friday, and we know that trend following, you have to take trades on every single day. You can't use a filter and avoid days, because we never know when such a big trending day is going to come. But when you apply the rules on Thursdays, expiry days, after the weekly expiry from 2017 to till date, if you observe the movements that is occurring between intraday open to close, the movement is much smaller on expiry days compared to other days. So there is a higher chance of breakout failure or trade failure if you trade based on no trend following or breakouts that happens on Thursdays. So what people can do is, instead of avoiding their option buying strategy completely on Thursdays, avoid options buying, but do that on futures. So only on that day. So only when you do it on that day. So even if there is a trend, you can still able to capture that using your futures. But if you keep doing it, and if there is a lot of breakout failures, or if the market stays in range bound, your options is going to expire worthless. So you're going to lose much higher when you're trading options buying strategy on Thursdays. So even though you have a strategy based on futures, you can convert into options, but only on Thursdays you can continue to trade on futures and avoid option buying on expiry days.
Interesting. Interesting. So yeah, I think so. That's that from my end on the seasonality. So long
Sure.
story short, yes, yeah, there is seasonality.
Yeah, and I have did some data analysis. Probably I'll share it in the next session. So
That would
during
be
the next
awesome.
session, I did the last 10 years analysis with Nifty and Bank Nifty and how the market behaved prior to weekly options and how it is behaving after weekly options and how the market reacts only on expiry days and how the VIX reacts before expiries and after expiry days. So multiple data analysis I've did it and kept it in Excel. Probably in the next session as a part 2, I'll convey that.
Awesome.
Thank you. Thank you so much for your time,
Thank you,
Vishnu.
everyone. Thank you.
Bye bye.
Bye.